Good morning. I'm Jackie Way. I'm with Brown & Singh CPA in Manassas, Virginia, and today I'm here with Joyce Pearson, CPA, who's going to help us with some questions regarding year-end tax planning. Good morning, Joyce. Welcome to the program. How are you today?
I'm fine.
What we'd like to talk about is some of the hints that would help you better get ready for year-end. First, we'd like to address some of the personal issues. We were talking about maximizing your 401k or your IRA contributions.
Yes, each type of pension has a different dollar amount that you're allowed to put in. A regular IRA, it's $5,000, and a 401k, it's like $25,000, I think, or and a simple IRA is around $11,500. I might have some of those numbers off, but and then if you turn 50, you can put an extra amount in. They call it a catch-up, and like for the IRA, you can put another $1,000. And then of course there's the Roth IRA, which is not deductible, but when you take it out, it's not taxable. And if you have a lot of income, it might be a good idea to also do a conversion from a regular IRA to a Roth. And then you would pay some taxes on the amount you're converting, but then when you take it out later, it'll be in a Roth and it won't be taxable.
Okay, also we have flexible spending accounts available for some.
Yes, some people, their employer offers us flexible spending where they put money aside at the beginning of the year, a certain dollar amount, and then as they have medical expenses, they get reimbursed. And that money is tax deferred. You're not taxed on it. And but you also don't take it as a medical deduction, but a lot of people don't meet the requirement of being over 7.5% of adjusted gross income. So it's a really good way to defer your salary and use it to pay your medical benefits. And whatever amount you put aside, you usually lose it if you don't use it. So you should go ahead and stock up on maybe your Allegra D, or get your refills on your prescriptions, or if you need a pair of eyeglasses or you need to go to the dentist, go ahead and do that and get reimbursed for that so that you don't lose the money you set aside.
Okay, I believe another good hint is that if you have to pay estimates to state,
yes,
this is a good time to pay them?
Yes, because you get the deduction in 2012 if you pay it in December on your itemized deductions for state taxes. So that would bring down your federal income tax due because you get that deduction early.
Okay. What about if I'm a business owner? Are there some hints that I could use for
Yes.
Reducing taxes?
Yes. The main rule is if you're a cash basis taxpayer, you want to defer your revenue to January if you can and increase your expenses. And that way, your net bottom line, net income will be lower, and then therefore you'll pay less tax. So you would want to pay any bills that are sitting around, maybe pay your rent for January and December. And then if you can, with revenue, it's constructive receipts. So if you've gotten the revenue, you have to claim it. But if you have somebody that owes you on your accounts receivable, if you're cash basis, you can tell them to wait till the first week of January to pay you, and then you don't have to record that till 2013, and it's not on your 2012 tax return.
Okay, my expenses, like if I charge something on my credit card, does that count as an expense in this year?
Yes, anything on a credit card is an expense when you charge it. No matter, you may not pay the bill until January, but whatever you charge on a credit card is an expense on the date you charge it.
Okay, also, how about if I invest in some assets for my business?
Yes, there's something called the Section 179 expense, and in 2012, I think the deduction is $125,000. So if you have a big profit, you get to take, if you buy computers, furniture, office equipment, vehicles, and vehicles of course have a limit, but you can deduct the full amount, and there's also a bonus depreciation of 50%. So you get to take a lot of depreciation, and that's one way in the tax code that businesses get a break, because if you buy depreciable assets that are going to last more than a year and they have a depreciable life, you get to take this Section 179 expense as long as you have income. Now if you don't have income, you just depreciate it normally.
Okay, now, on the way here this morning, we were talking about how you had just attended a tax class.
Yes.
And when you attended the class, one of the big issues you were telling me about was identity theft.
Yes, I spent a lot of time the first day of the 2-day seminar. The IRS is actually they are estimating in 2012, for the 2013 tax season for tax returns for 2012, they're going to maybe give away up to $4 million to the wrong people in refunds, because people are stealing Social Security numbers and filing the taxes earlier than the taxpayer does and getting a refund. And then when the taxpayer files, they can't file electronically because their Social Security number has already been used, and their refund is held up because they have to do all this investigating. So it's a big problem, and they're finding that some refunds are being sent to the same address several times, and even the same Social Security number, and it's a huge problem.
So is there something we can do to help protect ourselves, or?
Well, we should never give our Social Security number over the phone to anybody, and the IRS never calls you on the phone or emails you. So that's another scam, that if you get an email and they say they're from the IRS, that's not the IRS. They only send letters. And they would never call you and ask for your Social Security number over the phone. You call them. They don't call you. They only send letters. And basically, I think the IRS needs to come up with a plan of how they're going to monitor this identity theft and keep it from happening. But the best thing to do is never have your Social Security number out where people can see it. As tax preparers, we need to not have it out where the cleaning people or other repair people or the mailman, or we need to put our work away and not have it out where others can see it and other clients can see it. That's one way to protect our clients. And then clients should just never give their Social Security number out to anyone.
Okay,
Except their CPA.
Were there some other things that you learned in your class that would be helpful now?
Yes, we talked a lot about the health care bill. There is a new surtax for people that have a W-2 over $200,000 if you're single, and I think $250,000 if you're married. And employers get a credit for hiring an unemployed veteran if they've been unemployed more than 4 weeks. And there's 2 different credits depending on how long they've been unemployed.
So we were talking about the expiring tax credits. Can you give us some examples of the things that are going to be expiring if they don't get passed by the end of the year?
Yes, actually I have a list here that they gave us at the seminar, and I highlighted the ones that are expiring. This is the list. It's the alternative motor vehicle, hybrid lean burn or alternative, and that's on Form 8910.
So that means that if I bought a hybrid vehicle in 2013, I probably wouldn't be able to take that credit.
Right.
Okay.
The alternative vehicle refueling property, there's a partial expiration. Actually, the one you just asked me about, there was a partial expiration.
Okay.
That's Form 8911.
So I should buy my car now.
And these expired actually prior to 2012.
Okay.
The new hire credit, is the 2010 Hire Act of 2011. That's on Form 5884B. The alcohol used as fuel on Form 6478. Biodiesel and renewable diesel used as fuel. The Indian Employment Credit. The New Markets Tax Credit. The railroad track maintenance. Energy efficient home builders. Energy efficient appliances. Mine rescue training, and employer wage credit for employees who are active duty uniformed services. So those all expired in 2011, before January 1 of 2012. So those credits are no longer available to the taxpayer.
Okay, so what other ideas do we have to save money for businesses? If you need to hire somebody, hire them, because there's a lot of expenses besides just the wages. There's the unemployment tax, and of course you always have to buy equipment for new employees, and if you're
equipment is old, you might think about updating because of the 179 expense. Listen to your tax preparer, get with your tax preparer early before year end to try to come up with some strategies.
So do you have any last minute advice for somebody?
Yes, just like I said, try to use the 179 expense. If you hire new employees and need to grow your business and hire employees, there's a lot of other expenses besides the salary. There's the unemployment tax, and you always need to be upgrading your equipment, so that's a good thing to do before the end of the year. And also, use your tax preparer for tax planning. Get with your tax preparer as soon as you can before year end to see if you owe tax and what you can do to bring down the tax. And also know that this year, with Congress not finished deciding whether they're going to renew the Bush credits and things like that, your taxes may be done later. So be patient with your tax preparer this year, because taxes may be filed a little bit later because the IRS has not actually upgraded all the forms because they know that things are going to change. So have a lot of patience this tax season with your tax preparers and the IRS.
Okay, and we'll hopefully have some new hints for you starting in the new year. Have a good end to your year. Thank you very much.